In the depths of the 2008 financial crisis, a profound idea emerged. An anonymous individual, under the pseudonym Satoshi Nakamoto, published a white paper. This document, titled Bitcoin, a Peer-to-Peer Electronic Cash System, would change the world. It outlined a revolutionary concept, a decentralized digital currency. This currency would operate independently of governments and financial institutions. Bitcoin would empower individuals to transact directly with each other. Transactions would be recorded on a public ledger called the blockchain. On January 3, 2009, the Bitcoin network came alive with the mining of the Genesis block. The Genesis block contained a message hinting at Bitcoin's potential to disrupt the traditional financial system. The early days of Bitcoin were marked by experimentation and excitement. A small community of developers, cryptographers, and cypherpunks gathered online. They saw it as a way to create a more open, transparent, and equitable financial world. Bitcoin's journey from a theoretical concept to a tangible reality had begun. The value of a single Bitcoin was initially negligible. Early adopters mined thousands of Bitcoins on their personal computers. The first known commercial transaction using Bitcoin took place on May 22, 2010. A programmer named Laszlo Hanyecz bought 2 pizzas for 10,000 Bitcoins. This event, now celebrated as Bitcoin Pizza Day, highlights Bitcoin's exponential growth. As Bitcoin gained traction, online forums and communities became hubs for discussion and development. Early adopters saw Bitcoin as more than just a digital currency, it represented a powerful tool for social change. However, Bitcoin's decentralized nature also attracted unwanted attention. The dark web marketplace Silk Road used Bitcoin for illicit activities. This association with illegal activities cast a shadow over Bitcoin's early years. Despite these challenges, Bitcoin's community continued to grow. Developers worked tirelessly to improve the technology. Entrepreneurs saw opportunities to build businesses around Bitcoin. The Silk Road's shutdown in 2013 sent shockwaves through the Bitcoin community. The event highlighted the risks associated with Bitcoin's anonymity and decentralized nature. It also triggered a wave of regulatory scrutiny. Governments and law enforcement agencies began to take notice of Bitcoin's potential for illicit use. Further adding to Bitcoin's woes, Mt. Gox, once the world's largest Bitcoin exchange, collapsed in 2014. The exchange lost hundreds of thousands of Bitcoins belonging to its users. The Mt. Gox debacle was a major setback for Bitcoin's credibility. It eroded trust in the nascent cryptocurrency ecosystem. The aftermath of these incidents led to calls for greater regulation of Bitcoin. Some governments considered banning Bitcoin altogether. Others sought to bring it under the purview of existing financial regulations. Despite these challenges, Bitcoin's core value proposition remained intact. Developers and entrepreneurs remained committed to building the infrastructure for Bitcoin's widespread adoption. The cryptocurrency's resilience demonstrated its staying power. Following the Mt. Gox collapse, the Bitcoin ecosystem began to mature. New exchanges with enhanced security measures emerged, restoring trust in Bitcoin trading. The development of wallets and payment processors made it easier for individuals and businesses to use Bitcoin. As Bitcoin gained wider acceptance, its price began to reflect its growing adoption. In 2017, Bitcoin's price surged to nearly $20,000, capturing mainstream attention. The surge was fueled by increased institutional interest and speculative trading. Retail investors flocked to cryptocurrency exchanges. Financial institutions began exploring ways to incorporate Bitcoin into their portfolios. The mainstream media dedicated extensive coverage to Bitcoin's price movements. While the 2017 bull market eventually corrected, it marked a turning point for Bitcoin. The cryptocurrency had moved from the fringes to the forefront of financial innovation. The stage was set for Bitcoin's continued evolution. Despite its growing adoption, Bitcoin continues to face challenges. Its price remains highly volatile, driven by speculation and regulatory news. This volatility poses a barrier to wider adoption. Businesses are hesitant to accept Bitcoin if its value can fluctuate dramatically. Regulatory uncertainty also casts a shadow over Bitcoin's future. Governments around the world are grappling with how to regulate cryptocurrencies. Some view Bitcoin as a threat to their monetary sovereignty. Others see it as an opportunity to foster innovation. The lack of clear regulations creates uncertainty for businesses. Despite these challenges, Bitcoin's proponents remain optimistic. They argue that its decentralized nature and limited supply make it an attractive alternative to traditional currencies. The development of Layer 2 solutions like the Lightning Network aims to address Bitcoin's scalability limitations. The future of Bitcoin is uncertain. However, its journey from a niche technology to a global phenomenon is a testament to the power of decentralized innovation. Bitcoin has sparked a global conversation about the future of money. Bitcoin's future is a topic of intense debate. Optimists envision a world where Bitcoin becomes a dominant global currency. They see a future where individuals have greater control over their finances. This vision of a decentralized financial system challenges the established order. Others are more cautious, highlighting Bitcoin's limitations. Scalability, volatility, and regulatory uncertainty remain significant hurdles. They question whether Bitcoin can overcome these challenges. Despite differing opinions, one thing is certain: Bitcoin has sparked a global movement. It has ignited a conversation about the nature of money and the role of technology. Whether Bitcoin succeeds or fails as a currency, its impact is undeniable. Bitcoin's story is a reminder that innovation often emerges from unexpected places. Only time will tell what the future holds for Bitcoin.